Hi everyone, welcome to my short Monday market update. As always, if you want to watch the full version of this session, make sure to reach out to the team below and become a VIP client where you can go through our course and learn how to become a sophisticated investor in the cryptocurrency space. All right, let's get into the data. Massive on the data. We have access to Caprio dashboards, which allows us to see the institutional flows. Now, if you've been following our work for a while, you'd know that our view here is that institutional flows drive the Bitcoin market and in turn the crypto market. So as we have fallen to 80,000, now we're climbing back to 90,000. Are we in a bear market or a bull market? Still up for debate. But what we do know is once these institutional flows begin to come back in, the market should be in a much better place and likely can drive us higher into 2026. Again, we're trying to shed this 4-year cycle. Hasn't been proven yet that we're not following the 4-year cycle traditionally, although I argue very strongly in my latest works that the 4-year cycle is completely kaput, defunct, gone. If we look at this here, so this is the institutional flows. This is the amount of Bitcoin mined per day. So it's essentially getting sold on the market directly as soon as it gets data. So sold in the market, that's sell pressure daily. When we've gone down to 80,000, we had max fear, capitulation, short hands were just selling left and right. Also ETFs and Bitcoin treasuries were also selling. So it was a cluster. And we are now seeing a mean reversion, a bit of a pushback. The demand is beginning to return. But when you have all of the major institutional demand drivers selling and not buying, it is bad news. So that we have to absorb that, and then buyers eventually come back in and gain more confidence. So this red line here is really important. Now, this orange line here, we're seeing Bitcoin treasuries begin to buy more than the Bitcoin mined per day. Also seeing ETFs begin to return towards that level. Also see this oscillator, this little ratio down the bottom. Whenever we've been red in the ETF era, means that we've dropped below that amount mined at that period of time. And when we've been green, it's a sign of really strong demand in the market. That's when we've launched back higher. So when we cross over this red line again, moving higher, and over here, this mean reversion, I think, is building for us to move higher back above 100,000. So this is the data we're looking at, and I think it's looking really positive. More data. I wanted to share with you the Checkonchain hodler dashboard. So in a super high level nutshell, this is what are the short-term holders doing? Are they panicking? Are they sustaining themselves? Are they driving us higher? So really, really useful. What kind of stress are they under? And when we were dropping down to 80,000, we saw significant stress. So think about these people as maybe recent ETF buyers or recent people that bought Bitcoin thinking, okay, sweet, we're going to go have this Q4 pump. They're the ones that have gone, oh no, this isn't working out, going into gold or something. They've sold the Bitcoin and moved on. Really want to pay attention to this because some of these readings are off the scale in the ETF era. So the short-term holder MVRV down here shows you the unrealized losses of those short-term holders. So when we are so far below this ratio and this big blue level down here, the worst we've seen in the ETF era, it means that short-term holders are in a state of unrealized loss. So they're looking at their Delta app or their coin stats and going, ooh, I'm really far down on my purchase here. Maybe I need to get out because this could go down another 50%. And that causes that panic selling onto the market. And that's exactly what we got when you look up here on the SOPR. So this is the realized losses of those short-term holders. So again, the unrealized losses cause people to actually sell, which makes that realized. And you can see here that this dip over here is the biggest we've had in the ETF era of climbing up, from those lows. So this is significant. When we do bottom out in these regions on the short-term holder, we generally see a bottom in the market. And you can also translate over to the fear and greed index as well, which we've hit some significant levels not seen since the bear market lows. So a lot of this you put together and you go, right, this is a pretty significant local low and a corrective move in my view. Even if you look at it from a bear market low perspective, we're hitting a lot of the targets that we thought we'd get to in the bear market. So important to keep that in the back of your mind, but really, really strong signs here that we're bottoming out. Now, the next thing I want to see is the SOPR moving above this green ratio line, so above the 1 level. When we've had a big movement down like we've had and a big capitulation there, the minute we've crossed back above the 1 is when we're showing some strength. We're beginning to rally. So those short-term holders are now back in a state of neutral profitability, meaning they're feeling more comfortable. You're going to have a lot more people buying and adding to their positions above that level. So the market's less stressed. There's a lot more positivity about. So we're waiting for that to happen. And until that happens, we're still in a state which is quite depressed. But get above 93,000 and 100,000, then this is going to look a lot better. All right, we'll finish on Bitcoin here today because the chart is important. We have the weekly close today, but you know what? Nothing has really changed for 3 weeks. So we are really in that crab sideways crawl where everyone's looking to the downside and there's not much happening, which is a pretty dangerous time in the market to actually go short or thinking it is going to continue when we're holding that support level. Now, we thought the same thing up at 100K, we lost that. My suggestion is to, what we say to the masterminds, is to have an upside downside strategy. Don't completely think something is absolutely going to happen. Let the market tell you what it actually wants to do. Right now, this is telling me the market is still really weak. We're still in this massive downtrend, lower highs all the way down. We also made a new lower low for this sequence up here. But right now we're holding the 100-week moving average, which is where this white line is. It's at around about 84,500. So that's the level we need to close above consistently on a weekly and a daily. If we close above that level, we're fine. But if we break through that level, we got to close beneath that, 84, 83, 82, we're in a lot of trouble. And we're going probably down to the 200-day moving average down at 55,000. So just keep that in the back of your mind. Now, if we are reversing and we're trying to shed this 4-year cycle narrative, then this downtrend here needs to be breached. And if you see my squiggle there, we just need to break this downtrend and flip 93,000 roughly. Just follow that squiggle. It gets us out of all this nonsense here, gives us a really strong platform, higher high, higher low, where we can really assault the above levels at the 50-week moving average and the 10-monthly EMA. Now, that might mean nothing to you people. However, I really think those levels are super important. They're just above, and generally when you lose them as support, like we did over here, so that's where the levels sit through there. When we lost it here, then the momentum is like a self-fulfilling prophecy. Everyone's stop losses get triggered. People sell because they see the same thing and it goes down. If we can do the same on the upside and flip those levels, then that means we're in a much more positive state. But they're also going to act as resistance going higher. So if in summary, this is a region for you to start paying attention, but our levels haven't been hit yet. We're in no man's land here. But the great thing about where we're at is the market is very much pinned in one direction. Everyone's looking to the downside and everyone's shorting, thinking they're going to go much lower. So if we can get any upwards mobility here through 93,000 and then ultimately 100,000, we can move very, very quickly because the market is very much pinned in the other direction. And a lot of short sellers, so people that are betting the market's going to go lower, are going to get liquidated on the way higher, giving us fuel to really rip through some areas. And it can create some FOMO going, oh, but 4-year cycle was supposed to be over. We're supposed to be in a 2-year bear market. Now we're moving higher. What gives? I'm going to have to pay attention again. So that's my read currently, guys. It's not up, it's not down. We just have to pay attention for these levels to come to us, and then we can make a decision from that point. Ultimately, though, I'm a longer-term Bitcoin bull, and I will be adding on the dips no matter where it goes, but we do have to watch out that we are in no man's land. We've got a cap on the top and a floor on this. We need a decisive movement one way or the other. Have a great day. Merry Christmas. Catch you again next week. Bye.